Hello, and welcome to Virtual Investor Conferences. My name is John Viglotti, and on behalf of OTC Markets, we're very pleased you joined us for the Clean Energy Metals Conference. Our next presentation is from Electric Metals, a development company with manganese and silver projects in the U.S. Please note you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Scheduled Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Gary Lewis. He's the Group Chief Executive Officer and Director of Electric Metals USA Limited, which trades on the OTCQB venture market under the symbol EMUSF and on the TSX under the symbol EML. Welcome, Gary.
Thank you, John, and thanks to OTC Markets for the opportunity. I'll just call everyone's attention to the cautionary statements, including some forward-looking statements. Electric Metals, as John alluded to, has two suites of assets, all geared to the electrification of energy. We have silver assets in Nevada. We have the manganese asset in Minnesota. Both of these assets have NI 43-101 resource estimates, and my focus today will be solely on the manganese asset. Just looking at the broad investment case, the thesis behind Electric Metals is supporting the transition to clean energy. I'm going to talk a little bit about that because not a lot of people really know what this transition means. But the opportunity for us and opportunities for companies like us is how important the supply of raw materials, critical materials, are to this transition. As I mentioned earlier, we have a multi-asset portfolio, both with NI 43-101 resources. We're in a tier one location, so very much US focus, but also very much about building a US domestic supply chain. That's the opportunity and quite unique to our business in the context of manganese and energy storage. In terms of near-term catalysts for the company, we have resource expansion potential across all of our projects. We've just completed a near 30-hole drill program at the Emily Manganese project, so I'll talk a little bit more about that. Land acquisitions that we've previously undertaken and are continuing to undertake, and the opportunity exists there for resource expansion. And our focus in the near term is on advancing battery test work and process design work. In terms of the capital structure, the board owns around 30% of the company, so significant alignment with board and shareholders, and a very strong and supportive shareholder base. A very experienced team. As we jokingly say, there's a lot of grey hair around our board and around our management team. Multidisciplinary in M&A, exploration and mine development. And importantly, as we transition from exploration into development, we've formed a technical advisory board, and I'll talk a little bit about the competency set and the people that we've brought onto that board. And finally, it's a recurring theme that I'm sure you'll hear in many of the presentations is the favourable macro outlook, a significant forecast for high growth for purity manganese, as well as for many other of the battery materials. There's nothing different there. Significant government support in America, US government, as well as state government support. We're seeing end users or users, participants across the supply chain coming in and participating, whereas we haven't seen that in the past. And electrification, specifically driving demand for silver, which is quite, not a lot of people realise that silver is in fact a technology metal itself, but also for manganese. Just talking a little bit about what does the transition to clean energy mean, because there's obviously a lot of support, as we can see there, estimates up to $2 trillion in support of this initiative. But essentially the transition to clean energy means the transition to clean electricity. And when we talk about clean electricity, we're talking about generation on the one side. So we can see the chart there for the US, just looking at the growth in solar, the growth in wind, but also includes hydro, it includes nuclear. So it's the clean sources of power, electrical generation. But to make it economic, you need to store it. And that's where metals like manganese comes to the fore. And we've just shown there the big focus at the moment is on transportation, EVs in particular. And you can see like 6 times uplift year on year for EV growth in the US. So you've got this strong downstream end user demand driving the upstream. But we can't forget it's about generation, clean energy generation, as much as it is about the storage of that electricity, of that energy. And again, the recurring thing you'll see is the bottleneck, the emerging bottleneck. And I've never seen it in my many years in this industry of raw materials acting as a potential drag on this important transition to clean energy. Again, the chart on the right is one you're going to see echoed through many of the presentations, high levels of forecast growth. That chart is showing forecast growth for manganese cathode demand, and that's showing up plus 600% through to 2040. You know, it's interesting. A lot of people ask the question, well, why has manganese not been spoken about until recently? And I suppose it's because it's the fourth most abundantly used mineral on the planet. So it's got very high, and so people just expected that there'll be plenty of it. The thing about manganese, though, is only 1%, and some of the market pundits actually say less than 1%, 0.5% of manganese is applicable to high purity battery products. So whilst there's lots of manganese on the planet, there's not a lot of it that's applicable to batteries, specifically lithium-ion battery. And in fact, CPM Group, which is one of the preeminent market forecasters, are forecasting there'll be more manganese mines and processing plants required than any other battery metal. And I think that is, again, a reflection on the fact that people have just thought that it's going to be okay. In terms of manganese in batteries, 50 moving into 60% of lithium-ion batteries contain manganese. Not only are we going to see organic growth, if we can call it that, so as the market grows, the use of manganese will grow. We're also seeing significant market share growth with new chemistries coming in, which are manganese heavy. And that's, I think, the key point. The largest battery manufacturer in the world is CATL out of China. They're going mainstream on a battery chemistry called lithium manganese iron phosphate, whereas that was previously just lithium iron phosphate. So what the manganese does is add stability to the battery, and it does essentially what cobalt does, but in a much cheaper and I suppose in a much more less disruptive supply chain manner. You know, just to dwell on that for 1 second, cobalt is predominantly out of the DRC in Africa, all sorts of issues there with respect to corruption and use of child labour, etc. So there's challenges for the supply chain and how to use that. So manganese is coming into a lot of the chemistries as a substitute specifically for cobalt to reduce the bill of materials, to reduce the cost of the battery, but also just to give a bit more predictability around the supply chain. Moving to the US, and this is an important part of our business, is the importance of building this US supply chain, is because America, in fact the whole of North America, is 100% reliant on manganese imports, predominantly out of Africa, Gabon, Ghana, South Africa. That's on the raw material side, but on the chemical side, China accounts for 97% of advanced battery materials, and that's pretty much across the suite of materials, whether it's high purity cobalt, cathode active materials, etc. Generally, China just dominates this market. So that's why the US government brought in the Inflation Reduction Act, Infrastructure and Jobs Act, etc., to try and bolster this battery industry in America. So what it's done is it's done tremendously well. So the Inflation Reduction Act ultimately is offering incentive for consumers to buy electric vehicles that have predominantly US or allies or countries that the US has free trade agreements with. So to incentivize the purchase of electric vehicles that contain predominantly materials from those countries and domestically. The trouble is that's not too easy for America when it imports a lot of these materials, as you can see from the chart on the right. But it gets worse because a lot of these critical materials are coming from what we term foreign entities of concern. So that's why metals such as manganese sit on the critical minerals list for both the Department of Energy and the Department of Defense, because in a sense it's a national security issue. If I'll give you an example, I mean, manganese, the historic use for manganese was in steel and alloys. There's no substitute for manganese in those usages. So if for whatever reason there's a disruption to the supply chain and the US is importing 100% of that material, well, there could be significant disruptions to industry in the US. And that's why, as I say, it sits on both the Department of Energy and the Department of Defense. So that's our focus, is trying to build a closed loop supply chain in the US. So we want to extract the mineral and produce high grade, high purity battery materials in the US. Talking a little bit about the supply chain, and all those dotted lines are showing how that currently exists. So if we look, the main supply chain outwardly is from Africa into China. So China currently accounts for about 3/4 of all of the manganese that's produced in the world. So you've got manganese ore coming into China, and then China distributing some of their processed material up to South Korea, to Japan, and then all the way back to the US. So, if you add all those kilometres up, that's, anywhere from 20 to 30,000 kilometres of supply chain. Whereas if you look in the little dotted white line, sorry, it's a little bit hard to see there, but there's Minnesota on the right, and that white dotted line moving west, just notionally to the west coast of the US. That's 1,900 kilometres, 1,900 kilometres. So you can see there's a lot less of potential disruption, a lot less cost, and a lot less added emissions to the supply chain. So again, that's one of the underlying themes here, is that we can cut a lot of those movements and potential disruptions by building a domestic US supply chain, which is why that's so important for the US and so important for our business. So our mission is to become a significant domestic producer of high purity, high value manganese chemical products. We're not focused on intermediary products, even though we have one of the highest grade manganese deposits in the world. And in theory, we could supply a bulk product to those traditional usage, as I say, of steel and alloys. Our focus is solely on value add to build a supply chain from ore all the way through to chemical products. Just turning to the project itself, we're in the industrial heartland of the US, which is Minnesota. Minnesota has a great history of mining, a near 200-year proud history of exploration and mining. It produces most of the iron ore for the US and has done so for over 100 years. So our manganese project sits in the Cuyuna range, which is one of those iron ranges. That's important for a number of reasons, and I'll talk a little bit more about the infrastructure advantages we have. But also, where we sit is not controversial and lends itself to project development, whereas some other projects within Minnesota have experienced difficulties. So I'll run through some of that. Firstly, we sit on private and state land, whereas a lot of the issues that have gone on are on federal land in the north and federal environmentally pristine land. So we don't have those issues. We're on private and state land, and also we don't sit in an environment pristine area. Also, the main issue for Minnesota is water. They say there's around 10,000 lakes. So the water table is a key concern, as it should be. So Minnesota, quite rightly, has very stringent permitting environmental requirements for the permitting of mines. So the fact that we're an oxide deposit means that we don't have the issues, the concerns around sulfide mining, which again is a lot of those problematic projects that have experienced issues in Minnesota from a permitting perspective. So our water table is the Mississippi River. So again, nothing particularly controversial or sensitive around that. We need to deal with community issues and socialise our project. That's something we'll be doing. Same with the tribes. So I think we've got advantages given where we are and what we have that potentially other projects haven't been able to contend with and move through. Just looking at our resource base, so I mentioned this is it's certainly the highest in North America by far. Just under 20% MN, which is manganese metal. 19.6%. And we can see the bar chart on the right just showing how that looks with some of the other global development companies, which are typically averaging around the 10% MN mark. But that 20% that I mentioned in the resource doesn't really talk to the full story because we are getting upwards of 50% MN in our drilling, and I will talk a little bit more about that. So our current resource sits at 6.5 million tonnes at 19.6% MN. We've just finished the drill program, which I'll talk about, and we will be moving towards a resource upgrade. So we're confident not only can we at least hold that grade and potentially even increase it to a higher grade, but also we're very confident of increasing the tonnes as we move to that resource upgrade. And the thing about grade, all of us in this industry always want to be able to have the grade story because, as they say, the grade is king. But in this instance, what grade does is assist in the processing, the downstream processing. And in its most simplistic sense, having such high grade, when the mineral components of our ore is essentially, it's about 25% manganese, about 25% iron, and the rest of it is silica and some clays. So we don't have a lot of moving pieces from a mineralogy point of view. So such high grade removes complexity, and it's going to be complex enough to be able to produce these high purity chemical products. So to start with such a high grade ore really puts us in an excellent starting position. So I'm just going to turn now just a little bit about how we're going to move into increasing our resource. So here's a map of our current land holding. You can see the sort of the U-shape, the square U-shape there. The brown orangey colour is the bedrock, so that's called the Emily Iron Formation. All of those drill dots there with the pink, that's called drill shells, grade shells. So it's showing the historic drilling. So Pickens Mather and US Steel had drilled quite extensively in this area in the 1940s and 1950s. That's why we're confident that we will be able to increase our resource. So in terms of our own drilling, well, I'll start quickly. The initial resource was just in that area. Hopefully you can see my cursor. So the resource of 6.5 million tonnes was just from 7 drill holes. We've just completed 29 drill holes across this area here with all the historic drilling. And I mentioned that US Steel had drilled here, and they actually conceptualised an open pit which had 24 million tonnes in it. So we've got 6.5 million tonnes in our resource. The historic drilling pointed to, around upwards over 20 million tonnes. So we're confident the drilling we've done will lead to a consequential increase in our resource size and importantly, holding that grade. And I'll just give an example of what we're seeing in the drilling. And again, sorry, unfortunately, it's fortunate for the company, but not so fortunate when you're trying to present these results. We've had a lot of high-grade manganese results. So we've just finished a 32 drill program, of which 29 hit the target depth. So that's why we're talking about 29 drill holes. But we've had particularly high-grade intercepts, and you can see the 49s. And when we convert that manganese, which is Mn, which is the metal, into MnO, which is the mineral, which is essentially just got oxygen in it, we're approaching theoretical limits of what MnO can go to. So very high grade, ultra high grade material, and all the advantages that come with that. If you look at the two pictures on the right, you can see what those high grade intersections look like, just some small snippets there. And you can see it's almost pure metal coming out of the ground. It's certainly garnered a lot of interest from a lot of institutions in America, because this is highly unusual to see this grade, particularly in North America. This is South Africa, which is sort of the epicenter typically of manganese. So to have this high grade in North America is an outlier, and just one of those gifts of God that we're blessed to have. But in addition to having these high grade intercepts, we're also getting nice thick intersections, and it's still high grade when you compare it to the other development companies that we're seeing. But we're getting 30 up to 40 metre intercepts, which is what we call run of mine, which is just going to be feed into the mine when we eventually get it permitted and get it specced out. And so that augurs well for the future development of the project. So when we talk about the MLE Manganese project, we're not just talking about an exploration project with a bunch of drill holes. This is the surface rights that we have exclusive access to. So on this site here, you can see some infrastructure, some inbuilt infrastructure here, and that was a trial mining processing facility that we've inherited, as I say, the rights to. The great thing about this site was it was pre-permitted. The other great thing about this site, it's a small footprint, which makes for, as we know, when you look at economics in mining projects, the minimal distance you move materials and the minimum number of times you have to move materials lends to the economics of the project. So again, hopefully you can see the cursor. The centre of the resources that currently sits is here. So you can see there's not a long way to go to get to that processing facility. So when we talk about development of the MLE Manganese project, again, all subject to stringent Minnesotan requirements and environmental procedures and regulation. Stage one will be reconfiguring this pilot plant. The importance of that is not just to assess the technical feasibility of our processing, but also to develop samples for customers. This is not, manganese and manganese battery materials are not products that trade openly. They're contracted. They're industrial minerals and they're contracted industrial chemicals, etc. So we have to give samples to customers, number one, to show that this material will fit within their supply chain, but also that we can be a reliable source of supply, which is a critical concern for a supplier, for a consumer of these products to want to shift to supply. So that's critical. So stage one of our development is to reconfigure this pilot plant. Stage two will then be developed into a mining project, and as to what level of processing we do at site here, we'll see as we move through the development process, as we move through the socialisation process, as we move through the permitting process, we'll figure all of that out. But then the final stage will be going downstream to produce chemicals. We won't be producing chemicals on this site, but our goal is to keep everything in Minnesota. Minnesota deserves to be a hub and emerging centre for this emerging clean energy economy. And this is one project that I think is important, not just for America, but for Minnesota, and can be the future of mining in Minnesota as well, given, as I said, the characteristics of the project being an oxide deposit. It's a small project, it's manageable, it'll be very environmentally conscious and friendly, but it's also the future, it's the green energy. So it's really, as I say, it augurs well for the future of what mining can be in Minnesota. Again, just talking about the benefits of where we are, industrial heartland of the US. So every form of transport you could ever want. To the north, you've got Duluth, which is the largest inland harbour in the US. We've got rail, we've got road, we've got power, electricity and gas to site. So there's no real infrastructure build. So that's the hard infrastructure. On the soft infrastructure side, as I say, we sit in the Iron Belt, so we have access to a lot of expertise, mining expertise, blue collar, white collar expertise in support of this sort of initiative. So, we couldn't be happier about where this project sits from a infrastructure point of view. In terms of our commitment to ESG and to the environment more specifically, we wouldn't have a business if it wasn't for the sustainability, for future sustainability of the planet. So we remain very true to that. And a lot of things we're doing at the stage of our business is very much in front of our peers and in front of what we need to do from a regulatory point of view. Have no doubt, regulation will come into this industry, and it is coming into this industry. It's also coming into the financial reporting and accountability of carbon across the supply chain, as it should be again. Mineral businesses in particular, need to be accountable for impacts, and all that will be measured and all that will be costed in the future. So we're getting in front of that. We're exceeding all the minimums from an environmental point of view. For example, we had our environmental consultants, one of the largest environmental groups in Minnesota, Bar Engineering, come in when we were scoping out our drill holes. They were there at site doing all the test work. So we did an environmental assessment, archaeological assessments, well before we finalised our drills, so our drill hole location. So environmental considerations are embedded in everything we do. But beyond that, as I say, with regard to ESG, we're doing some important things. We're partnered up with two companies in the UK. The first company is Digby ESG. Digby is a benchmarking platform for ESG, where companies can go in, take a snapshot of where they sit today, and then have a set of criteria to build to best in practice ESG compliance. So it's a wonderful tool. It's an online tool, and we've embarked on that process. The other partnership we've embarked on is with Circular, again with the UK, which does two important things for us. It allows us to track carbon emissions, CO2, across the supply chain. So that's, whilst it's not that as important as we're developing our business, but as we start producing, we want to know that all our supply chain is contributing to net zero across our business, net zero emissions across our business. So we've got a platform to be able to do that. The other important thing about Circular is it allows us to demonstrate US provenance. I mentioned earlier about the importance of the Inflation Reduction Act, and that requires, as I said, a predominance of US or allies or free trade agreement allies of the US and the materials that goes into electric vehicles and that supply chain. So with this platform, we can demonstrate our US provenance across our supply chain. So again, these are two things that we don't have to be doing, but it's embedded in our DNA, because that's the sort of business that we want to be, and it's the whole basis upon which our business is going to be built. In terms of where we are going with the business now, we're moving on for exploration into development, and the big part about that are these technical studies that are emerging. So I mentioned that we're embarking on a resource upgrade. That process has started. We've appointed Fort Dynamics out of Colorado. They've already been to site, done their quality assurance, quality control checking on our drilling procedures and data processes, etc. So that's happening. We would expect a resource upgrade by Q4. We have over 200 kilograms of samples going from site to Cametco Laboratories in British Columbia, Cametco being one of the preeminent global battery laboratories. So we're embarking on the battery test work there. So we're excited by those developments. We're embarking on preliminary mine studies and design. Moving towards the back end of the year into next year, we'll be starting to focus a little bit more on downstream, and that will start with where to position our downstream processing facility. Again, our goal. Our mission is to do everything in Minnesota, so we'll be working hard to make sure that happens. And importantly, all of these bodies of work are being managed by our technical advisory board. And again, I'll describe who they are. So the little flow chart down below there is showing what our goal is. And our goal is to produce high purity manganese sulfite monohydrate. So that's the salt. HPMSM is what is predominantly used in lithium-ion batteries. And there's a number of pathways to get to HPMSM. Direct from ore, which is what the goal that we're working on. We feel confident about that. But you can also go through the metal. So go from high purity electrolytic manganese metal through to the salt. And the good thing about this project is we've already produced electrolytic manganese dioxide or material from this project, and also produced electrolytic manganese metal. So we're confident one or both of those pathways will prove feasible. Just looking at the development more specifically, you may be able to see just the light grey areas, what we've achieved to date. The last one that we've blanked out there or greyed out there is our finishing up at the drilling. And now we've just spoken about the test work, etc. So you can see we're progressing in a very disciplined fashion throughout. So at the end of this year, getting the NI 43-run resource upgrade into a preliminary economic assessment into next year, and then into pre-feasibility studies, etc. And so we're tracking with environmental studies, with the social license, and dealing, extensively with our communities, etc. On the permitting streams, as well as all of these technical tasks as well. Just turning to the corporate snapshot, a very experienced board, head by our chairman, Mr. Oliver Lennox-King. Oliver has deep experience in Canadian capital markets, has taken 2 companies our size into multi-billion-dollar takeouts. So we're very, blessed to be honest with you, have Oliver join a company like ours. He's invested significantly in the business. In fact, the whole board has invested significantly in every round. We account for 30-odd% of the business. About 111 million shares out at the moment. Technical advisory board, some great competency there. Across the main disciplines we need to develop this business. Dr. Ian Pringle is the chair, very well-known global geologist with commercial experience. Tyson Hall, chemical engineer, downstream experience. So he's built these chemical plants that we want to get to. Worked for 14 years for Albemarle, I think the largest lithium producer, certainly in America, one of the largest in the world. And also more recently with 5E Advanced Materials, which again is a lithium boron chemical producer. So again, this is where we want to get to. Mr. Herman Scriber is a process engineer, so all the process work we're doing now will be under his watch. And then Mr. Tim Arnold, who's a 40-year veteran in mining. So this is the expertise we need to understand the feasibility, technical development of this project from mining through to downstream. So I rushed a little bit at the end, but thanks very much, and I'll just take some questions if I can. So we had one question. You claim that the MLE Manganese project is the highest grade in North America, while others claim to be the largest. Can you please compare MLE to other manganese projects in North America? One thing we've never, and thank you for the question, one thing we've never done is claim to be the largest, because this is not a volume play, it's a grade play. I mentioned earlier about the importance of high purity, and starting with such a high grade ore is of major benefit. So in terms of comparing ourselves to grade in North America, the simple answer is that we're about double of what there's a couple of projects in Canada, there's one project in Arizona in the US, and we're about double, if not just over double. And that's how it pretty much lends itself across globally as well. But as I say, we've never claimed to be the highest grade in the world. Another question, which is slightly more complicated, have you given any consideration to CapEx? I mentioned the 3 phases of development, the pilot plant through to the mining development through the downstream. Obviously, the further out you go, the least certain you are of sort of making these assumptions. But again, we have a fair degree, I won't say certainty, but visibility on the pilot plant. We've had 2 chemical engineers go out there independently. So the range to upgrade that, what we have there is between $10 and $20 million, which is not a lot of money in the context of, we're seeing peers in our battery material universe spending over $100 million on pilot plants. So that's feasible from a company of our size. In terms of mining, we think, in the range of the mine itself, 50 to 90 million, but it's a range. And then probably in the $300 to $400 million range on the downstream. Just to quickly address the financing, it's not like the old days where you're just going to issue lots of shares and dilute your capital. There's various ways of funding, US government funding, supply chain funding, collaborations with commercial partners, prepaid offtakes, etc. There's project finance, which is, it's probably the simplest form of finance for these projects. So we think the equity component of financing these projects will be minimal. So we're not expecting massive dilution as we go down this development path. Just another one question, what can we expect from electric metals over the next 6 to 9 months? Well, I think in the near term, we haven't announced most of our drill holes, so there's certainly going to be a lot of announcements in that regard. We will be announcing some corporate activity on our silver assets. And then as we develop through the metallurgical test work, etc., right through to resource upgrade, Q4 into PA next year, there's going to be a full book of activities and certainly not a lot of news flow for the company to contend with. One more question. Are you engaging with the US government, and will the MLE project qualify for any federal grants or other funding? Look, that's an excellent question. We've always forecast that we will be engaging with the US because, as I say, this is a strategic metal. It's on the critical minerals list, and it's an important one for the US. But we don't want to go too early. We need to scope out what this project really looks like. So there's three things we need to be cognizant of. First thing is ready so that we can talk intelligently about the project, and we'll do that once we get through this next phase of test work. The second thing is to make ourselves and the project known, and we're doing that. We're building bridges in Washington as we are in the state of Minnesota. But the third thing is also understanding what that process looks like, and we've been informed it's quite basic that a lot of people fail in their applications because they just didn't fill out the application correctly. So it's really educating ourselves as to what is required, being ready for that, and making sure, as I say, that people will know about us before we go in cold and make those applications. But certainly that will be in front of us, and we look forward to engaging with the US government at the appropriate time. So I think we're out of time. So thanks for